I just want to extend a special welcome to my panel of experts and practitioners who have taken their time and agreed to be with us today. I'll just introduce them in the order in which they will share their submissions. Firstly, we have Barry Cooper. Barry is an identity expert and ex-banker. He is currently the technical director at the Center for Financial Regulation and Inclusion. So as you are aware, this webinar is being hosted by Cenfri in collaboration with FSDA. That's Financial Sector Deepening Africa. The second panelist is Professor Louis Dikoka. Louis is an AML CFT expert and professor of law at La Trobe University in Australia. I think he's quite known among a lot of you and in the AML CFT circles. The other panelist is Mariam Zahari Jamila. Mariam is a policy analyst at the Alliance for Financial Inclusion, AFI, which most of you know that they work on financial inclusion and integrity issues. Then there's Nkosi Natingube, who is with Finmark Trust and currently based in Harare, Zimbabwe. The other panelist is Seth Nana Amoako, who is with the Ghana Financial Intelligence Center. We also have Ramizu Islam, who is the Deputy General Manager for the Bangladesh Financial Intelligence Center. Last but not least, we have Ashley Emmanuel, who is Head of Programs at EFINA, Nigeria. Ladies and gentlemen, welcome to this webinar, and thank you very much for taking the time to participate. I'll kick off with our first panelist, Barry Cooper. Barry, could you please share with us why the KYC and CDD and digitization issues are becoming much more important during this COVID-19 and why they're important for the COVID recovery period? And also just indicate to us what are some of the promising KYC and CDD innovations that you have come across and that could be useful in the context of Africa. Barry, please take it away.
Well, thank you, Monsieur. Good morning, afternoon, and evening to everyone. I'm just going to, that would be a tall order to do even in 2 or 3 hours. So I'm just going to do a brief context, and I'll position some of the current context of particularly looking at the COVID-19 impact, clarity on some of the concepts that we will be using in the webinar, and then I'll just position some of the questions that come from both the context and the subject matter. So just what's happening what are the COVID-19 implications? What we definitely see is that this is not business as usual. This is a new environment. What we are seeing is that financial services and points of interaction are being disrupted, either through lockdowns or through other aspects like the logistics, cash logistics, goods logistics are disrupting services. So what that means is that people need to switch services in order to maintain their financial lives, but also that, on the horizon we see potential issues with credit and financial institutions, which would require people switching institutions. All this then bottles down into a KYC bottleneck, or because we've got there's a need for contactless onboarding, and it's become a priority. So the new environment is resulting in a switch of existing customers into alternative channels, new customers into channels, and also if you look at the informal environment has been significantly disrupted because people are within lockdown, can't move physical things around. So the analog environment has also been disrupted. And so you've got a lot of people either changing services, changing modalities, and then requiring to be verified and identified in new different services or service providers. So that's problematic. And already we've seen some financial service providers reporting 300% increase in digital channel onboarding requirements. Some of them not so much, but overall it's a switch. There's a switch to digital, and it's growing. So that's it means that we've got a problem. We've got to be able to onboard people efficiently, quickly, safely, and maintain the integrity of the service. So then this need arises for innovation and strengthening of CDD. Particularly, I don't need to mention that the health risks and social distancing, particularly on onboarding, where paper and physical face-to-face is not optimal at this point. Digitalization has the potential to mitigate these challenges and to break down barriers, but digitalization comes in many forms. Not every digital mechanism is as equal or robust as any other. So it's about the choices. It's about choosing those aspects or appropriate aspects for the situation and for the risks. During this webinar, we'll be using concepts, and I just wanted to just have some clarity on it. So KYC, this is a widely known concept, but it's not well defined. So KYC is more a business term, and it equates more or less to the onboarding of customers, the verification of identity of those customers. Whereas CDD, when you talk of CDD, it's a lot more defined, and that's in relation to beneficial ownership, developing customer profiles, ongoing monitoring. It's a little bit more than just KYC. And particularly a part of CDD is customer identification and verification. In the current day, we're speaking of identity proofing. So it's a function for verifying and authenticating the identity of individuals to an appropriate level. I mean, you can't do these things absolutely. We're not going to get DNA from everybody, but it's a case of understanding how robust the different digital proofing mechanisms and processes are. So elements can further be digital or physical. So for instance, you might need to have digitized copies of physical documents or combination of both, and that can sometimes also be quite problematic. How do you deal with those? And this is a particular problem for women in sub-Saharan Africa. 35% of women and 26% of men in sub-Saharan Africa lack a formal ID. And you'll notice one of the questions that we're posing is, how do you onboard people without a formal ID? It's possible, but how do we do it in an effective way? Just in the nick of time, in March 2020, FATF issued digital guidance on digital identity. So the FATF 40 recommendations have been out for a very long time, and in the last 10 years at least, the risk-based approach has been quite prevalent. But what we're not seeing is the take-up. So the why is definitely, we know why. The what, to a degree, we know what. It's the how. It's how to evaluate, how to implement appropriate measures. And I think that this guidance comes at perfectly the right time. And Professor de Koker will be touching on these two important publications. So addressing the issues, what we're looking at is regulatory innovations. How do we change regulatory frameworks to enable innovation safely and within risk tolerances? How do we strengthen CDD by removing weak identifiers that limit access, particularly where you've got very, very ineffective or less robust paper documents that compared to some more robust digital documents or digital means. Weighing those up is important to strengthen the CDD process. For example, proof of address is no longer a requirement in South Africa and Hong Kong. It's been why do something that is not as robust, where you can replace it with far more robust digital means that are tested and that are shown to be a lot more robust. RegTech and digital ID, these are important aspects in addressing the issues. RegTech, some of the RegTech options give you an overarching surety and identification, particularly in cross-referencing and cross-tabulating data elements and identities within jurisdictions, and of course across the globe as well. What that gives you is another level, another type of surety, just beyond the mere compliance with a certain list of consumer due diligence issues. Proxy IDs are becoming very much more important. Proxy identities are an identity that stands in for your identity. Proxy IDs are very old. I mean, telephone number is a proxy ID, the bank account number is a proxy ID. But it's the application of proxy IDs in the digital space that's become much more important now, particularly as they can enable payments instruments, and they can enable payment routing, and they can stand instead of your ID. It's understanding how robust and how reliable they are and for what purpose they can be implemented. But proxy IDs are particularly important for G2P, particularly where people don't have identities, but they do have other instruments. Remote onboarding, absolutely. I mean, distance and non-face-to-face options, not only for health, but for people in remote areas, and particularly where points of interaction in remote areas have been cut off. People need to remotely onboard. What you don't want is a whole lot of people having to travel between towns, cities, and villages constantly for this kind of activity. So we see in India, securities regulator endorsed the use of video-based ID verification and electronic signatures, but that's particular to their context. In Ghana, the KYC is transferable from the SIM registration to allow for remote mobile opening of accounts. If your SIM registrations are particularly robust, why not utilize it? And that it can be done in a number of countries. Some other countries maybe not, because the SIM registration process is not robust. Some of the key questions, as I said before, how should African regulators engage with individuals that have no current proof of identity, but they might have digital means of proving their identity? How should African regulators respond to recent guidance on digital identity? Are they behind the curve? Some of them are in front of the curve. I mean, it's all, how should they respond? What are the promising digital identity proofing options during the post-COVID-19 era for particularly payments and remittances? You know, it's the what. You notice most of these questions are how, and it points to implementation issues, but this is definitely one of the whats. How can identity proofing and digitization options be promoted, and what are the challenges? So it's been, as I said, it's been 10 years, and we have not yet sufficiently digitized. We've been caught unawares by COVID, which I think can be an impetus for good, for greater digitization, for more effective and efficient financial services, and more effective risk mitigation. How can AML-CFT frameworks be made more effective and responsive to identity proofing and digitization, particularly where we see that digitization often digital proofing options exist, but the frameworks would probably require a lot of work, or maybe years in legislative changes. So those are some of the key questions. This is not a limited list of questions that we will be trying to weave through the discussions today. Thank you very much, and I'll hand it back to Monsieur.
Thank you very much, Barry, for those inputs. So I'm Masiwa Rusare. I'm an engagement manager with the Center for Financial Regulation and Inclusion, Cenfri. Okay, thank you very much, Barry, for those inputs. You did mention the different options that are available, proxy IDs, the importance of contextualizing digitization to country specifics, and also some of the bottlenecks, KYC, and capacity constraints. Now, Louis, in light of all these issues that Barry has mentioned, we know that FATF did issue guidance for countries on COVID-19 risks and responses. What is the implication of such guidance in terms of the African context and contextualization and looking at especially particularly KYC and CDD? And also when we look ahead, when we're looking forward, what could the KYC and CDD options and opportunities look like going forward?
Thank you, Masiba, for that question. And thank you also to you and the Cenfri team for the invitation to join. It's great to be with you again. The journey with Cenfri researchers go back quite some time on this topic. Listening to you tonight, I was thinking at least 16 years on this topic of account opening barriers and identification. And from that perspective, it was great to see how much movement there took place in the past 2 months. And looking at it from the perspective of African regulators, I'd like to touch on 3 particular events and statements and papers issued by FATF, starting with the digital identity paper that Barry showed on the screen a little bit earlier, that was released in March. I think many regulators have not had an opportunity to read it yet, necessarily, especially with all the COVID-19 challenges, but it is an incredibly important document because it, for instance, introduced the notion that remote account opening, that has always been classified as higher risk by FATF, is not necessarily higher risk. Depending on your controls that you impose, they determine that it may actually pose a standard risk or even a lower risk. I think that's really important. The second thing that it introduced requires us to change our language. In the past, we looked for robust identification and verification control measures. What FATF basically said is test the levels of assurance of the solution. This was the approach in relation to digital identity, but frankly, the same approach applies in relation to other identification forms. And don't simply reject it if it's not robust. Determine the level and then consider whether there are products that you can design with additional controls that can mitigate any risks that are introduced by a less robust identity verification system. And very importantly, just to hammer that point down, they have a 1-page case study contributed by the US Treasury discussing progressive ID, which actually allows for an individual to apply for a basic bank account using digital ID that was obtained, but without presenting any identity evidence. And then, if that digital ID has a lower assurance level for identity proving purposes, but a good authentication assurance, so you can ensure the same person will continue using it, you can actually mine the usage data to provide you with a higher level of assurance over time of their identity as proved or verified. So very important. That happened in March. And then, of course, COVID-19 started hitting the world on a big scale and the shutdowns followed. So on the 1st of April, FATF issued a presidential statement. And they recognized the challenges that COVID-19 poses for normal account opening and encouraged the use of technology, including, and I'm quoting, fintech, regtech, and siptech to the fullest extent possible, linking that back to the digital identity. So 2 very great kind of empowering statements that were made by FATF. That was followed in May by a more complicated paper that FATF issued on risks. Many of the risks that they listed were known, but there were some that were particularly problematic for developing countries where we specifically wanted to employ simplified due diligence within a lower risk context, because they warned that in some jurisdictions that still rely on paper-based reporting systems or that have inadequate database software, that they may face delays in receiving or processing reports, that in other countries there are anecdotal reports of FIUs that are reducing their operations or even shutting down completely, that some have stopped providing international assistance to counterparts, that law enforcement and security resources in high-risk, poorly resourced countries have been severely limited, and that all of this may embolden terrorists and other criminals. So that posed a dilemma to employ or simply to use our existing past knowledge and assume that the national infrastructure remains as known and that all you need to do is risk rate your product. It actually also now requires a resync of the national infrastructure as it stands. So one of the most important things I think African regulators can do for every country is communicate to their business community what the national risk picture looks like under COVID-19. Don't let banks make assumptions that law enforcement is not functioning if it is functioning adequately. Communicate that, because otherwise we're going to hit a risk assessment barrier. Now, you also asked me about what the picture may look like after COVID-19 on CDD and digitalization. Now, that, of course, is going to depend on the country infrastructure that differs from country to country. And I do think what we are seeing is that those countries with a robust national identity system are in a far better position to embrace the new technological challenges and opportunities. But we also see there's a big wave of development of digital national identity systems. So perhaps after COVID-19, we'll see temporary lags in some countries, but I think the broader pattern over the next decade is that many of the identity proofing issues that we've been struggling with might just disappear. That does not mean the end of CDD challenges or identity proofing, and I want to touch on two. One is we see new solutions sometimes under temporary COVID-19 national security and crisis legislation being made available. That is great. But put yourself in the position, if you're a regulator, of a compliance officer who will think, what will I have to do when this 6-month reprieve runs out? How will I have to remediate my data? And how long will I be allowed to do that? And we need to be honest. We will see criminal abuse happening as a result of barriers being removed. It will happen. The question is not whether it happens or not. The question is the level. And hopefully the levels will remain low. But if regulators are spooked by what they see, then they may come down on institutions and say, we want the records to be brought in line with standard CDD within 2 months, for example. And that's not going to be doable. And you need to think through what the impact is if accounts will have to be frozen on customers and customer trust in institutions. So regulators will also need to think about how to manage the post-COVID situation as they regularize options, or whether the options that they've now provided will be permanent. And then lastly, very briefly, CDD challenges will remain, but we've been particularly focused on the potential of collaborative CDD, working together, not leaving institutions on their own to face these challenges. And those countries where the public sector have come to the party to help institutions to deal with COVID-19 AML CFT challenges, where we have good financial intelligence sharing partnerships, I think they'll be far better positioned to really leverage the developments during this period going forward. Thank you, Mr. Siwa.
Now, Mariam, if I can come to you, this is all well and good where the infrastructure is actually there, but in instances where infrastructure is a challenge, like in a lot of our African countries, what are some of the options that can be put in place to ensure that, for example, COVID-19 support can be provided to excluded groups? These may be SMEs, these may be refugees, but these are people without any ID, without any address. What are some of the experiences that AFI has had in terms of innovations for people with such limitations?
Absolutely, Masiwa, thank you. And let me start by thanking all our longtime colleagues and friends at Cenfri for organizing this very timely webinar. It's a great pleasure for AFI to be represented here, along with this excellent lineup of fellow panelists, to share some of our observations to the current COVID-19 response and for the foreseeable imminent recovery. So we're most happy to bring in the perspective then from beyond the Sub-Saharan Africa region to contribute to the discussion. Although I think Louis has also alluded to some of these challenges that we will be discussing soon quite eloquently already. So to answer your question, it would probably be useful for me to underline that we have noticed some dominant policy and regulatory responses across our network to address some of these issues where it would be difficult for customers, especially particularly disadvantaged and vulnerable segments of our populations, to be onboarded into the formal financial systems. So in order to understand the financial inclusion policy and regulatory responses of our members, we had conducted a network-wide member needs assessment when the pandemic first hit us. And there were two major ones that emerged. First, MSME finance, as you had raised, and digital financial services, or DFS. Here, of course, I would like to highlight DFS, although it is worth highlighting that there's also a KYC issue for MSMEs, many of which are needing to apply for economic support without having any previous relationship with financial institution. Hence, approaches such as tiered KYC may also be considered for SME clientele in the context. But if we look at DFS, across the board, we were glad to see very swift successes across our network in leveraging digital financial services during the response to COVID-19. So in addition to the basic things like fee waivers and increasing transaction limits, we had also seen on the part of central banks implementation of tiered KYC and simplified customer due diligence where they have been confirmed lower risk. So the FATF standards, as Barry and Louis had mentioned, already allow for these measures as part of the risk-based approach. They have been active in calling for countries to make the full use of the flexibility in the RBA in their COVID-19 responses. And we have seen this happen. For the specific purpose of G2P payments, jurisdictions can lower requirements quite substantially since they are assessed and confirmed as lower risk and have fairly limited functionality. So we saw this in the Philippines, who put out regulation for eKYC, which actually removed the ID requirement for social payments for both remote account opening and physical account opening during the enhanced quarantine period. So these relaxed requirements are in place until the end of this month, but it is geographically limited to the island of Luzon, where the enhanced quarantine is enforced. This is in order to facilitate the delivery of welfare funds to already identified beneficiaries, but who have no available valid IDs or transactional account with any financial institution. At the same time, Bangko Sentral ng Pilipinas, the central bank, introduced control measures to guard against MLTF risks. These included limiting transactions per account to not more than 50,000 Philippine pesos per day, and clients who would benefit from the simplified ID requirements, however, would be required to certify lack of IDs and agree to have their accounts monitored during the quarantine period. So in 1 month, actually, there were more than 300 million digital account openings comprised of e-money mobile wallets and accounts that were opened remotely as a result. But this is truly a human crisis. And as we all saw from the very beginning, the pandemic really challenged our fragile healthcare system, but just as quickly, it confronted us with drastic impacts on the economies and the livelihoods of the most disadvantaged and vulnerable segments of our societies, such as the forcibly displaced persons in some of our jurisdictions, and also women who typically lack the necessary identification, for example, to access formal finance. In Jordan, the Central Bank of Jordan amended regulation to enable eKYC for mobile wallet opening for forcibly displaced persons in the country. So all refugees can now use UNHCR identification cards to remotely open mobile wallets, which have actually quite diverse usage types. They can optimize them to make remittances, but also to make P2P transactions. And in Pakistan, we see an example of unconditional cash transfer payments for women with the launch of FSAS, the federal government's new poverty alleviation program, which sees cash payments delivered to 12 million families, representing over 80 million people. The majority of these payments have gone to women and are being delivered using biometric identification. This method is argued to be more cost-effective and also dignified for the women that we are serving, which compared to just vouchers or food aid, since it's linked to benefiting the local economy and providing stability to vulnerable families. But as Louis mentioned, these policy and regulatory measures have been implemented especially for the crisis. So they are largely temporary, they're time-bound, and we've seen very time periods for application of, for eKYC rules for the crisis. So how do we ensure that the things that we have worked on in driving inclusive financial integrity during COVID-19 are sustained for the recovery and also beyond, so that the gains that we have seen now are not lost? Some of the things we think we should consider. First, specifically in respect to digital ID and eKYC, the longer this goes on, we could be approaching a tipping point where this becomes the norm for identification and verification. And KYC paper documentation such as birth certificates and proof of address will probably start to appear quite obsolete. This would be a major gain for financial inclusion, but definitely, as we have seen throughout the network, this will require our policy makers and regulators to invest more in developing a strong risk-based AML-CFT regime. So this will actually require a lot of capacity building, increased coordination among domestic regulators and other stakeholders, but also to work towards modernizing our payment systems through developing digital ID infrastructure and to peer learn on best practices in implementing eKYC, as well as strengthening consumer protection in that regard, cybersecurity, data privacy and protection, etc. Let me end with that. I thank you again, and I look forward to some discussion after we hear from some of the other speakers. Thank you.
So Nkosi, just coming to you, the COVID-19, yes, I mean, apart from being a challenge in terms of the KYC and all these issues, it has also further limited the capacity and opportunity of people to earn, and making people much more reliant on remittances than before. So just wanting to hear from the work that you have been doing, what have been some of the promising KYC and CDD innovations and options, and even some challenges that the remittance providers and beneficiaries are encountering, and what are the opportunities for COVID-19 recovery?
Thank you, Masiwa, for the time. Thank you to Cenfri. And also good morning, good afternoon, good evening to all the participants, and we thank you for your time. So from a FinMark perspective, one of the key issues, obviously, that FinMark has been looking at over the years is the issue of remittances, the issue of financial inclusion, to say how do we make sure that all the people primarily in SADC are fully included in the financial services system. And one of the pillars that we've been looking at has been the pillar of financial inclusion on remittances. So we talk about COVID quite a lot, but the biggest impact has been the international remittances, and on two fronts. There's one, the sending economy, which mainly in this case you find that is South Africa, and the receiving economies being the countries around SADC and other African countries. So what has FinMark done when COVID lockdown initiatives came through. So one of the key issues that FinMark did play a key part on was to look at COVID from two initiatives to say who is sending and who's receiving. So there is a sending economy and there are sending policymakers who came in their way. From a sending country, there was a challenge on saying the sender is no longer employed, or their economic or their financial situation has been directly affected. So this is where now you find issues that have been covered by other speakers from Barry, Louis, to say the digital instruments that were being used had to come into play. And as FinMark, we tried by all means to make sure that the FSPs start looking at the digital angle more seriously. And this has been fully covered by the previous speakers. But one issue that has been still outstanding, and is the key impact, is to say, in as much as the instruments are there, the person on the ground, the migrant, financial sources are blocked, and there's no money to be sent. So what then happens? So this is where now I think we need to really focus on and say, where is the money coming from? For example, FinMark, together with other FSDs, they've been talking of saying we need to set up a fund that can also be used to help the senders effectively unlocking some of the economies, because that's one key issue that is now currently there, where the biggest challenge is there's no money that can be sent when one looks at international remittances. But the second issue that FinMark had done just before, well before COVID, and which is also covered if you look at the FATFI recommendations that came in, is the risk-based approach to say most of these migrants, you find that the risk-based approach way of doing things had helped them. So FinMark, one of the innovations that they worked with some of the financial services providers in South Africa was to say, how do we use a risk-based approach to make it life easier for migrants, where the issues of knowing that particular customer, identifying and doing a proper CDD is looked at, but is looked at through a risk-based approach, not a rules-based one. And the risk-based approach has been one of the issues that has been helpful under this issue of COVID, and has to be looked at differently by various regulators to say, how do we use a risk-based framework to make sure that from a migrant perspective, the rules are not as stringent as they used to be, but they still respect the risk and look at the risk and make sure that everyone who touches the financial payment system is known who they are, but is not looked at and blocked, and effectively taking financial inclusion to 10 years back where we came from. The other issue or other project which really looks at the opportunity, both the opportunities and the challenges, is what the previous speakers have been talking about, the issue of digital identity. But from a FinMark perspective, we have been looking at this with an eye of focusing on the digital financial identity, and looking at digital financial identity through the eyes of SADC and also through the eyes of a migrant. As I indicated that FinMark did a research paper which is available on the website, you find that of the 3.7 million migrants sitting in South Africa, working in South Africa, most of them have challenges when it comes to remitting funds using the formal systems. And this is not a case that's just peculiar to South Africa only. Even other African countries have this challenge to say most of these migrants, they are economic migrants, and migration is an old thing, but they may not yet be having proper documentation to be able to jump to the formal system, and also especially now through the COVID pandemic. But one of the key initiatives that we have been trying to see how the most fintechs and RegTech can come up with is to say, how do you use digital financial identity as an opener, as a solution that can become even more relevant? For instance, we're looking at, let's say, for instance, if we look at SADC as an example, to say, with SADC, hello?
Sorry, 1 minute.
Yes, sir. So with SADC, how do you make sure that within SADC, the issue of the financial ID is used to help economic migrants and also to boost financial inclusion, and to make sure that the challenges that have come up with COVID have come onto board. So the RBA is one of the frameworks that has been implemented, and we believe that it will help to pacify the challenges that COVID has brought in. And then the digital financial identity. If you look at the innovations of various companies that are focusing on the identity, the issue of the digital financial identity is something that we believe will be quite relevant. Thank you, Masio.
Thank you very much, Nkosi, for sharing those initiatives. I mean, the creation of a fund, as well as the innovative use of risk-based approach, but also the reminding us that it's the people on the ground, the human stories that really matters most. Now at this point, I just want to take a few, just two questions from the participants.
I have particular interest in how more women can be brought into financial inclusion when so many of them both lack any form of necessary ID and are also heavily restricted by social and cultural norms. So how can these be overcome?
Okay, thank you very much for that precise question. Now, we'll take Nishil's question as well, and then our panelists will respond. Nishil, please go ahead.
Thanks everyone for all your insights. I think the question that I had is that I noticed that in the context of sort of Europe, the European Commission's proposed a new high-risk third country list, and that includes some countries in sub-Saharan Africa. I think Ghana potentially being one of them, and a couple of others. And I just wanted to know how sort of events such as these will have an impact on the approach taken with respect to regulatory frameworks in the context of financial crime in a post-COVID-19 environment.
All right, thank you very much. So the first one from Helen, I'll direct it to Mariam, how women can be taken on board under these initiatives. And then the second one to Louis on the EU third list and the impact on regulatory frameworks. So Mariam, you have 1 minute to address that.
Thank you, Masiwa, and thank you very much, Helen, for that very important question. Definitely, there are a couple of things that we can do to start bringing women into the formal financial system when there is a lack of identification documents that they can use in order to be onboarded. First is to collect the sex disaggregated data on actual possession of eligible forms of ID amongst women, so that the regulator, policymaker, and the FSPs can understand the differences between both genders in terms of their ability to present ID for KYC. Second is also to incorporate gender considerations in our national or sectoral risk assessments. Now, this is going to require a lot of coordination on the part of the AML-CFT unit with the central bank and its financial inclusion unit, but also other important stakeholders such as women civil society organizations, and the Ministry for Women. We could also implement proportionate identification and verification requirements after that risk assessment has been conducted successfully and a risk-based approach has been established. Hopefully, after that, the regulator should be able to socialize these regulations and simplify customer due diligence for specific financial inclusion products that have been confirmed to be lower risk for lower risk women, and make sure that they comply and also take on a risk-based approach when onboarding women. Thank you.
Louis, just 1 minute on the EU third list and impact on regulatory frameworks.
Well, Masiwa, if I can seal a little bit more, because I'd like to follow up on that excellent answer given by Mariam. And that is just to tie back, Helen, to the digital identity paper. And the idea that has now been positioned by FATF that you can actually open an account without ID verification, I think is hugely empowering for women that do not have identity verification documentation. But you need to design your controls appropriately around the product, and you then need to use the data footprint to help you build surety about the person that you're dealing with. Second aspect linked to that, I'm waiting for a country that actually embraces an evidence-based, risk-based approach. Because if you do that and you look at your criminal justice statistics in the country, you may find that women actually pose, according to the crime statistics, a far lower crime risk than men. And if we truly have a risk-based approach, why don't we factor that into gender-sensitive account opening processes? Now, moving on to the question that Masiwa posed to me, the EU risk, Nishal, very good catch on that one. The EU risk list builds off the FATF blacklist and grey list that we all know well. The problem is it's going to be more difficult to get off the EU list than off the FATF list. And the fact that the country moves off the FATF list, and many African countries have moved back, the EU list has a greater stickiness. What is the impact? Not really on regulators. The impact, I think, is going to be bigger on institutions. Why is that the case? Well, regulators that adopt regulations allowing institutions to simplify their due diligence are allowing them to do that. They're not compelling them to do that. And while the institutions listen to what the regulator allows them to do, they also listen to the message they get from the international correspondent banks. And those banks are often more risk averse. So if those banks are worried about the fact that the country that you're in is on a list of the EU or on the FATF list or on another list, you would, as a compliance officer, tend to be more risk averse, because otherwise, although you bring many people into your bank, as a result of that, you may lose access to the international financial system. So yes, it is a complicating factor, and kind of like the FATF paper on COVID risks, this has not been ideally positioned in the midst of a COVID-19 crisis in many developing countries. Perhaps for regulators, you speak with a stronger voice and you determine what your regulations look like. So think about how you can neutralize any negative messages in that regard and assure international correspondent banks. Don't leave it up to your institutions to do that. Thank you, Masiwa.
Now we get into our second segment of the webinar. We have three speakers. We have Seth Amoko from FIC Ghana. Seth, can you just share how Ghana is experiencing the KYC and CDD innovations during this COVID period? What are some of the challenges and implications going forward? Seth, you have the floor.
Good morning, and I thank you for the opportunity. I must say that I've enjoyed the earlier, presentations, and I've taken notice of some of the comments that I think we can also implement in Ghana. Back to my main question, as you know, almost all the countries in West Africa, or to be more specific, in the whole world, we are all having challenges when it comes to the COVID issues. On the KYC CDD in Ghana, for most of the banks, I think there hasn't been a lot of changes when it comes to conducting proper KYC CDD. Most of the international banks in Ghana, like Standard Chartered Bank, ABSA, and the other international banks, they still go ahead to conduct their normal KYC CDD. They follow the laid down procedures. They ask for information as and when they need to ask for. And as earlier presenters said, they are all using the risk-based approach. If they think the customer is too risky for them, they ask additional information just to make sure that they are doing the right business with the right person. And then in conducting proper KYC CDD, it has also increased the turnaround time for customer experience. Some of the KYC forms are submitted to the banks, maybe a day or two. The banks also conduct their own internal checks, and that can also affect customer relationship when it comes to turnaround time. Another issue is the fact that remittances has also reduced because of the fact that most of the banks and even non-banks in Ghana, before they conduct Western Union or MoneyGram transactions, they ask a lot of questions, and that has also affected or reduced the number of remittances in Ghana. Another impact on the KYC CDD is the fact that in terms of conducting KYC CDD, some of the banks, they need additional information, maybe from notary public or from other relevant stakeholders. And because of the COVID, they are not able to get some of this feedback on time. And it hasn't been very helpful. Some of their clients, especially potential clients or new customers, have also decided not to go ahead to do business at all because of the fact that the inconveniences, delays in transaction. Another challenge we experience is the fact that some of the existing customers were moving a lot of funds around. One of the banks in Ghana filed a report to FIC because a customer had walked in there to conduct transaction in millions of dollars around the COVID, which is very, very unusual. So I think they were taking advantage of the COVID period to do a lot of illegal transactions. But as you know, the banks are also trained in terms of reporting suspicious activities. So some of these things have been flagged and also reported to FIC. Let me just go to how Ghana has responded to some of these challenges. And one major policy that has come out is the fact that the country or Ghana has also reduced the cost of fee transaction. So for example, sorry, I forgot one thing. Government decided that transactions around, let's say, $20 should be done for free of charge. I mean, there shouldn't be any commission. So the use of the digital platform has been encouraged in Ghana, and it's been helping a lot of the non-bank financial institutions, the mobile money activities, as well as even some of the local remittances. So one policy which has come up is that if someone is going to conduct transaction, which is less than, say, $20, the bank or the mobile money operator should not charge any fee on it. So it's one of the policy which has come out from that. The mobile money operator, however, is supposed to conduct the normal KYC CDD, making sure that the system is not being abused. So it has also been very helpful. Another policy which has also come up is the fact that the banks are supposed to educate their clients just to avoid panic withdrawal. People had the fear that COVID was going to stay forever. We don't know when it's going to end anyway, but they had the fear that they needed to go to the bank and withdraw all their funds. Some also wanted to discontinue their investments. So the banks have been educated on how to also create awareness about the fact that customers should keep their funds with them. Just to
Okay, Seth, maybe we'll come back to you a bit later. Sorry, we can't hear. The connection is getting getting very weak. We'll come back to you with just a minute or two to round up your presentation. But in the meantime, I think those are useful challenges and responses that you are sharing, and obviously the importance of also the banks and the FIC playing a educative role to their clients as well. Ramiz, let me come to you. In terms of Bangladesh, are you experiencing similar challenges, and what are some of the responses and opportunities that you are seeing?
Okay, thank you, Masiwa. Actually, COVID-19 is a global phenomena, so almost the same types of challenges we also faces in Bangladesh also. So first I'd like to thanks to Mariam, Luis, Helena also contribute to the one of the questions regarding the women financial inclusion. So I will go there also. So Bangladesh is not new to disasters or major humanitarian crises. Bangladesh is fighting a long-standing battle against the impact of climate change and currently hosts the world's largest refugee camp along its southern border. And in its 49 years existence, Bangladesh and its people have shown tremendous resistance in fending off only the natural disasters such as floods and cyclones, but also man-made ones. But the COVID-19 pandemic, however, is a crisis of completely different magnitude and one that will require a response unprecedented scales. So the COVID-19 related first circular was issued by Bangladesh Bank on 19th March. And after that, subsequently, we issue different types of policies. And the number of policies come to the market because we have a feedback mechanism. When we issue a circular or policy for the banks or financial sectors, and if there happen anything unrelevant or anything change is required, so immediately we change our policy. So it's a dynamic one. So we have almost 100 policy regarding the COVID-19 related issues. So on 31st March, government announced the details of its BDT 50 billion stimulus packages for export-oriented industries. And this includes assistance towards salaries and funding of 2 years loan to factory owners at 2% interest. And to ensure the transparency, government asks to distribute the salary through banking channel. And there is no any alternative to be other than digital payment in this situation. And if handed over it physically to the workers, would create a disaster situations. So BB circular suggests banks and MFIs, because in Bangladesh, actually, all the MFS is the bank lead model. So provides provide to create immediate awareness of the scheme among the target customers and help them to open MFS accounts. And customers can open these accounts free of cost. And we learned that only one MFS, that is the Bikash, they open 50,000 account per day for the RNG workers, because you know that Bangladesh is an export oriented country and led by the RMG, that is ready-made garments. 74% export is leading by the garments and 10% the leather industries. And these industries actually lead the most 90% workers are the women. So the policy that we open the MFS accounts during the COVID period, it is ultimately address the women issues because women financial inclusion is getting high during this time, because we have no any gender biased policy. So if we target our ready-made garments and other export oriented industries, it is ultimately address the women financial inclusion. And to apply this, actually the most dynamic one is that EKYC, introduction of EKYC. FIU circulated its guideline regarding the EKYC last January, first week of last January. So it is really helpful for us during the COVID-19 time that very easily and convenient way the customers can open the accounts. And also the MFS, they are also not getting any hurdles to open the account. But one key condition is that you have to provide NID, that is National Identification document, which is picture-based. So we get some information from the market that some of the workers, they are not, they have no any NID because some reasons, some are applied for the NID, or some one keep it in their workplace, but they are now living in their home country or home district because it is only the lockdown period. So the Bangladesh Bank relaxed the KYC issues. So before that, NID was the must for the eKYC. Later on, we relax it, and birth registration certificate, which is not a picture-based, but we accept this for the time being. So we soften the KYC and CDD issues. So in these accounts, actually, that the open during the COVID time, we actually instruct the MFS so that they can monitor the accounts, because if anything happened, like terrorism financing or money laundering issues is taken place in these accounts, they have to report it, which comply the FATF 40 recommendations. So monthly transaction limit also increased from approximately $900 to $1,300, and charges waived on cashing out also per day $12 if anyone cash out. There is no any charges for the COVID-19 period. And daily transaction limit for contactless debit and credit card, that is also increased for approximately $35 to $60 per day. And Bangladesh Bank announced a special waiver for urgent shopping using mobile financial services and debit and credit cards in the wake of the growing concern of COVID-19 pandemic, subject to approximately.
Sorry, Ramiz,
yes?
1 minute to
yes.
go.
Okay, thank you. So during this COVID period, also we issue some guidelines. Suppose for the AML/CFT issues, the merchants, they have to use the current account. But during this time, we allow that any merchant, they can use their personal account, that is the savings account or MFS account or SN account for the payments, for their business payments. So this is also a relaxation. For G2P payment, government announced another package for the poor people, poor families. Each family will get cash benefits. So everyone have to have asked to open MFS account. So it is a financial inclusion deepening in our economy. So everyone open the MFS account to get the government aid. So G2P transaction is getting high during the COVID-19 period. And also, if I come to the remittance issues, so up to February, our remittance was increasing day by day because we have stimulus package, we have some budget allocation for incentive who send the remittance to our country. But from the March, it is going down, almost 12% decrease because of the COVID. So we also then we issue another guidance for the remittance under that they can send remittance directly to the MFS account, and the limit is increased to 125,000 BDT. So these types of policy actually we take, and also we are not compromised with the AML/CFT issues also, because we issue separate guidelines for the banks and MFS for the reporting, monitoring appropriately and reporting it to the BFI. So we are getting a lot of STR and SAR even during the COVID period. Thank you.
Thank you very much, Ramiz, for sharing Bangladesh's experience and the commonalities of the issues, the risks, the challenges, and the responses during this COVID period. Ashley is from the financial sector deepening. That's EFINA in Nigeria. So Ashley, your question is, against all these KYCD and CDD options and challenges that have been highlighted and mentioned by the regulators, and also they indicated what the banks are doing around that, what are some of the key issues and priorities for market facilitation especially for yourselves and in the Nigerian context? And what are some of the opportunities going forward?
Hi, thank you. Thank you very much for having me, and I really enjoyed listening to the discussion so far. So thank you to the other panelists as well. I'll try to be pretty brief, being mindful of time, and I want to allow some time for questions at the end. But in Nigeria, so we've seen challenges similar to what many of the other panelists have highlighted so far. I think kind of providing a little bit more context in Nigeria, COVID really highlighted both challenges and opportunities related to rapidly expanding access to digital financial services, including via more expanded onboarding and enrollment of customers. As in with many other countries, once the COVID pandemic started, we very quickly saw a negative impact on livelihoods in Nigeria. And we've partnered on some research that found, as of late April, about 1/3 of Nigerian adults said somebody in the household had consumed fewer meals in the past week. We've also seen, impact on incomes, farmers saying that they're having trouble selling produce, et cetera. So it just really highlights the imperative of being able to expand G2B payments and other relief efforts pretty quickly. That said, we have a challenging context here in that, as opposed to some other countries in sub-Saharan Africa and globally, we don't have very widespread use of mobile money in Nigeria. So just under half of Nigerian adults have access to any formal financial services and are already in the system, so to speak. So for us, priorities are to figure out how we can work across the financial sector collectively and with other kind of government actors, including those who are managing G2P payments and relief funds, to quickly expand access to digital financial services and quickly sort of identify and onboard the most vulnerable customers in a way that is sort of a balanced approach and mitigates the risk that we're all kind of mindful of avoiding. So just to kind of summarize a few priorities for us, one is really just starting with coordination among stakeholders, because there are many different actors in the space, and we have government entities and others who have been processing disbursements in a more kind of cash-heavy way. So being able to digitize those transactions requires a new way of working and a more collaborative way of working. Another opportunity that has emerged is really kind of being innovative. So I think that the pandemic will provide or present opportunities for innovating generally across the financial sector. And one area for innovation will also be just in terms of customer onboarding and enrollment. So for example, one of the challenges we hear is it's difficult to enroll the kind of most vulnerable or most excluded customers who tend to be in areas with poor network connectivity. So how can we create solutions and technology that permits for enrollment in those kind of circumstances and in light of challenging infrastructure constraints? Some other priorities for us are harmonizing and even just clarifying, in some cases, KYC requirements across the financial sector. And this is important also as we see new actors come into the space who need to understand KYC requirements. But in general, I think that there can be some more clarity and kind of more harmony across the regulations. And then longer term, I think it's important for us to kind of collectively take into account some of the points that have been raised by other panelists about moving toward kind of a stronger system in which most Nigerians are captured and have a foundational digital identity. And there are some partners who are launching a project to work on that and tackle some of the kind of core constraints in Nigeria. In the more immediate term, we're also working with the financial sector to expand access to the current banking ID system, which is called Bank Verification Number in Nigeria, including through improved technology just to enable kind of more rapid enrollment in the meantime.
Thank you very much, everybody. And on that note, we conclude the webinar and enjoy the rest of the week.